Adulthood comes with many milestones, and making big purchases like a home, maybe, or a car or furniture are all at the top of the list. And some would argue necessary items. You might even consider buying a house and car at the same time, which, as a finance person, I would say, wow, that is pretty ambitious. Let's take a look at the options. Should you buy one before the other? So now let's get into it. A home is the largest purchase most people make in their lifetime. And most people do not have enough money saved to pay cash for a house or even a car. So that is where financing comes in. And people like myself help maneuver clients through this process. Many people find that getting approved for a car loan is a little easier than the approval process for a mortgage. This is because mortgages tend to require a much deeper investigation into your finances than car loans do. I joke with some of my clients when they ask or complain that we are asking for too much information or paperwork. That typically by the end of the transaction, I know more about them than they ever wanted me to. And one man was really upset and said we couldn't possibly need anything else from him. And I said, well, actually, we do need to draw some blood and check your DNA to make sure you are who you say you are. All joking aside, we do ask for a lot of paperwork depending on the type of loan or employment you have. But think about it. Would you lend several $100,000 to someone without verifying that they could pay you back? Because mortgages are a long term obligation, lenders are strict about requirements. A credit score that's too low for a mortgage approval may be acceptable to auto lenders. Mortgage guidelines are pretty strict, especially when it comes to credit and debt to income ratios. Our industry is very black and white. You either meet the minimum guidelines or you don't. So, for instance, with credit scores, if you are 1 point below, sorry, we need to raise that number before we can proceed. Debt to income ratios can be a little more forgiving to a certain degree, depending on different factors, such as what type of program are we using for financing? Is it a conventional FHA or VA? What is the credit score? And depth of the credit history, credit utilization, money saved, down payment, and type of occupancy, along with other factors. All of these can affect how forgiving the debt to income can be, but we actually try to stay at 43% or lower. According to the Consumer Financial Protection Bureau, borrowers with high debt to income ratios are more likely to miss payments. So, historical data tells us as lenders that we will have a better performing loan with a lower debt to income ratio. Let's take a look at a scenario. Let's say we have a client making $60,000 a year and they have small credit card debt and no child support, no student loans, and no car payments. They have an average credit score. The monthly payment on the credit cards are $75 per month. So we have income of $5,000 per month with a 43% debt to income ratio, that would calculate out to $2,150 minus the $75 per month credit card debt. Our client qualifies for a mortgage payment of $2,075. Now, let's take this same client and let's say they decide to buy a car first before investing in the home. And the new car payment is $550 per month. The 2150, that calculation remains the same, but now we need to subtract from it $75 and $550. The client now qualifies for a monthly payment of $1,525. That is a big difference in shopping for a home, a difference of $55,000. Rule of thumb is for every $100 in minimum monthly debt payments, this will affect the qualifying amount by $10,000. So let's look at this same client. Now they not only have the car loan and the credit card, but now they also have student loans or maybe child support. And the minimum payment on that is $300 per month. The home qualification now goes down to $1,225 per month for the maximum mortgage payment. While having an auto loan certainly won't keep you from home ownership, it will impact how much home you can afford or how big of a mortgage you'll be able to take on. So, since auto loans are less sensitive to fluctuations in credit and debt to income ratios than mortgages, many people find they still have a number of auto loan options available to them even after getting a mortgage. Ultimately, you have to decide the original questions. Do I buy a car first or a home? From a mortgage lending perspective, I would advise that if you can put off financing a car loan until after you buy a home, that is the better way to go. Otherwise, as I explained earlier in this video, you will qualify for less home. No matter what your answer is, though, you want to be smart about the timing and protecting your credit along the way. Next, you might want to watch this video where I give you more information about renting a home versus buying a home.